Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at advanced Fibonacci techniques. Now, Fibonacci is a really popular thing that a lot of traders use, and it's used pretty much everywhere. You almost can't look at any video online about trading without seeing fibs somewhere. It's a very popular topic. Now, of Fibonacci, within NinjaTrader, you've got a lot of different options. So looking up at the little pencil icon at the top of one of your charts, you can click on that, and that'll give you a drop down of all the different ones that you can use. Now, Fibonacci retracements are among the most popular. Next are going to be Fibonacci extensions and then Fibonacci circles. Those are going to be the primary ones. Extensions, you can basically combine those into the retracements to do the same thing, so it's not necessary. So retracements, the time extensions, and the Fibonacci circles are going to be the most popular. Now, starting with the Fibonacci of price, or the retracements. Now, that's going to be used basically to find a more beneficial area to buy or sell. Now, I've got a fib tool loaded up with some of the common things, the common levels that you'll see being the 50%, the 61.8%, and then just the standard low and high, as well as the negative 23.6% extension. Those are going to be the most common that you see pretty much everywhere. And you can use those to find Fibonacci of price, as well as finding Fibonacci cycles. Now, looking for Fibonacci cycles is just say, we'll look at this swing low. And you're essentially just going to take the swing low, draw up, tested the 50%, actually to the tick. Perfect. All right, take that swing low, draw to the next one, and just essentially keep going up and up and up and up until it finally breaks, where then you can draw it the reverse way. Use the swing high. We broke the low down here, come down, we tested the 50% to the exact tick, and fell right back down again. So Fibonacci of price is a really nice way to kind of visualize what's going on in terms of, is price favorable to get into. You can always use it to find Fibonacci cycles as well. Now, the next thing is going to be the Fibonacci of time. Now, the fibs stay the exact same. So 50%, 61.8, whether or not you put a negative 100 or a positive 100 in front of it, it's usually always 50 or 61.8%. So looking at the Fibonacci of time, the same pretty much goes. So using this move that we just saw down here, this cross, we can use time in that as well. So drawing from the swing high to the next swing, we can see that the 50% and 61.8%, in this case it's 150 and 161.8 because you need to project it forward, is where we're going to see time and price line up again for another setup. Now, say we were looking at getting into this trade right here. Well, we can use this to judge whether or not it was right on time or not. And you can see this one happened a little bit early. If it was in Fibonacci of time and price, it would have happened within this area here. Now, this one, because it happened a little bit ahead of time, would have told you right up front that it's going to be a little bit more aggressive. And that's going to be how you can use the Fibonacci of time. So another really useful tool to figure out when to get in and out of trades. Now, the next one is going to be the Fibonacci circles. Now, these are a little bit different, but the Fibonacci circles you can use in the exact same way. So let's draw from the high to the low, and looking at this swing high, we want to see it correlate and come into contact with one of the fibs. Now, preferably you want to see it come into the 61.8%, even the 38.2 to be a little bit more aggressive. But we already knew that this basically touched the 50% to the tick. It was a little ahead of time, being a little bit early, but the Fibonacci circles tell you, well, that's actually okay, because you came up and almost tested, maybe 2 or 3 ticks away, tested the 61.8% before rejecting back down again. And that gives you enough confirmation to get into a trade that you may have skipped just based on price or time alone. So you can use these in conjunction with each other to get a really good feel for what the market's doing. Now, along with that, you can use Fibonacci's in another kind of interesting way in terms of getting clusters of Fibonacci. Now, what that means is you'll have several different Fibonacci levels all lining up in the exact same place, showing you a little bit more of a probable area where you're going to see a reversal in price. So as an example, let's look at this one. We move down. We see the 50 and 61.8% are right in here. So let's see if the next high above that one to the same swing low lines up. Well, not exactly, but you'll see now you've got a 61.8 and a 50% of the other one lining up, and they're starting to kind of crunch together. They're creating this little cluster of resistance areas. And you can use that as you go further and further and further down for larger and larger resistance. So say we came down to the overall low down here, and we'll keep doing that for every swing high all the way down. And we'll see if we can find an area that really lines up really, really well to give us a nice cluster. So let's keep drawing back and forth until we find a nice solid area of confluence in all the fibs. And you'll notice what that does is it creates these little bits of clusters. Right in here, you can see there were 3 that were stacked up. We broke through the one side, but we tagged it here, came back, tagged it again, and went higher. And now here, there's 2 pretty much stacked right up on top of each other. When we came into it, bounced right off of it again. So that's going to be the Fibonacci clusters, and you can use those to try to find a little bit of higher probability areas to hop in trades. So that's going to be looking at the advanced Fibonacci techniques. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial. Have a good one.